Good day, guys. I hope you all are having a nice day. And also, Merry Christmas or Happy Christmas in advance. I want to use this first clip to appreciate everyone who have subscribed to my channel. I truly appreciate the fast growth on my YouTube channel. I really appreciate it. And in this video, I'm going to be just showing you how I analyze my markets on a weekly basis or on a daily basis. It's a very simple strategy. If you pay attention to it, yeah, it's a very simple strategy. So let's just get into the video very quick. So very quickly, I'll be showing you guys how I analyze the market, how I analyze the charts every single week. So for this video, we are analyzing USD CAD. So obviously, I normally start from the daily time frame using the line chart. Now on the line chart, I just need to look for my support and my resistance level. Okay, and looking for your support and resistance level, you want to look for your support and resistance that is closer to the current market price. Okay, that is very close to the current market price, because here is the current market price, so your support and resistance should be within this area. And for the fact that you're on the daily time frame, it means that any area we have a significant impact on the market. Okay, so we have support and resistance here already. So I'm going to pick this one. I'm going to signify it as daily. I believe everyone watching this video know what support and resistance is already if you are a trader. Okay, I'm going to pick the daily. I'm going to signify it as daily so that it will be easier for me to identify it later. Now on the 4-hour time frame, I'm going to change it from the line chart to the candlestick chart. On the 4-hour time frame, what I'm looking for is liquidity areas such as fair value gap, recent high, previous high, order block, equal lows. I'm looking for liquidity levels, liquidity area. So here I have the fair value gap already. Okay, fair value gap already. I have fair value gap over here. Fair FVG. I'm going to simplify it as 4-hour FVG. 4-hour FVG. Now, if you zoom out, just by looking at this chart, we all can agree that the market is in an upward movement. Okay, the market is in an upward movement. But then the market is currently approaching a previous swing high. The market is currently approaching a previous swing high, so this is going to be a swing high liquidity. Okay, because the market is looking forward to forming an equal highs on that level. Okay, so that's a very strong liquidity level for us. Now, one thing you also need to look out for is that where did the market get to before making this reverse to the upside? Where did the market get to before making this reverse to the upside? And we are going to find out where the markets get to. Now, if you look to your left hand side, there was a big inefficiency here. That was what caused the market to come down to fill this imbalance. Okay, to fill this imbalance. Now, after filling that imbalance, the market respected this order block here. Now, remember, this is a 4-hour time frame. So your order block, your support and resistance level, they are very strong on the higher time frame. The market respected that order block there, and the market started going back to the upside, but there were not enough liquidity to push the market in order for you to take out this swing high. So the market retraced back. So the market retraced back to fill this fair value gap. This is what is known as liquidity sweep. Remember, the market always seeks to fill liquidity because liquidity serves as the lifeblood of the market. It's what moves the market, it's the momentum of the market. So the market came down to fill this liquidity, causing market came down to fill this liquidity, all right, this 4-hour liquidity. And let's try to use our Fibonacci retracement. Now, if you use your Fibonacci retracement, take it up to this swing high, take it up to this swing high. You observe that the market did not only fill the liquidity around that zone, the market also respect this 0.618, which is a very, very crucial area in the Fibonacci retracement too. So the market respected a lot of things around that area. It respected the fair value gap, the market filled the fair value gap, and the market respected the 0.618 Fibonacci retracement zone as a support to push the market towards this swing high, gathering enough momentum towards this swing high. So in the 4-hour time frame, you look for your liquidity levels. Now we'll go over to the 30 minutes time frame. Now on the 30 minutes time frame, the drawing tools is getting too much, so I'll just take some out of here. I will delete some from it. I will delete this one from it. Yeah, then we should be good. Now on the 30 minutes time frame, we already have our fair value gaps, our liquidity levels. So your liquidity level must not be fair value gap, okay? It might be equal highs, equal lows. Yeah, I think a lot of you should know what liquidity levels already mean. And trading liquidity sweep is very, very important. It's very, very important because liquidity is what gives the market its momentum. Okay, so we have a trend line here. I'm going to delete this Fibonacci retracement too. So we have a trend line here as well. We have a trend line. To confirm a trend line, it must have at least 3 touches. Okay, 3 touches. So we have 1 touch here, 1 touch here, and 1 touch from the beginning. Okay. And also, remember that this zone is the fair value gap from the 4-hour time frame. Okay, the market came down to fill that fair value gap, also creating equal low. Market also created an equal low before moving to the upside. Equal lows, we identify that equal low, right? Equal low. Now this 4-hour fair value gap, if you have been observing the market, any kind of chart at all, you will notice that after a change of character, the market normally leaves other block of fair value gap. Okay, and then at this point, you can say the market actually changed character down here. Okay, but it's all the same. You can say the market changed character down here because on the 30 minutes time frame, remember now the candlestick are a lot more. This was the down movement that filled this imbalance on the 4-hour time frame. Okay, so if an imbalance, went up, created an order block. There was not enough momentum for it to go to the nearest swing high, so it came down, gathered momentum by taking out pending orders such as stop loss, take profits, buy limits, sell limits, orders, sweep this liquidity, and it started going up to this swing high liquidity, which might form an equal high in the nearest future or when it gets there. So the market changed character there. Okay. Now this 4-hour fair value gap, we are going to find it to the 30 minutes fair value gap. We are going to take it to the 30 minutes fair value gap. Okay, 30 minutes fair value gap. Here is it. Remember, fair value gap is a very, very crucial liquidity level. So on the 30 minutes time from now, we are just going to identify it as a fair value gap, no longer a 4-hour fair value gap. But we still have it in mind that there is a fair value gap on the 4-hour time frame around this zone. We have a change of character there. I have a change of character there. Okay, and then we have a break of structure. We have a break of structure there. Also, we have another fair value gap here. So now we have two fair value gap for the market to fill. We have two fair value gap in order for the market to fill. And remember, I said that liquidity is like the lifeblood of the market. It serves as the lifeblood of the market. The market always seeks to fill liquidity. So trading liquidity sweep, then let's say you trade after the market created an equal highs or sweep any kind of liquidity, you need to target another liquidity zone and use that as your take profit. Okay, I'm going to demonstrate that, and I will also explain it in this current video. Now, just as we did on the 4-hour time frame, using the fib retracement to see where the market retraced down to before gathering momentum again and pushing to the upside, we're also going to use it in the 30 minutes time frame. Now, in the 30 minutes time frame, where we will start to draw the fair value gap, the fib retracement from and to, I will also explain it to you. So this, we can consider this as the last pullback of the market before the significant move. Okay, so we take our fib retracement, let's see, and we'll take it to this swing high. Take it to this swing high, right? You can put it here, but we are hopefully expecting the market to get here, so we'll take it to this swing high, right? Take it to this swing high. Now you can see that the 0.618 level is resting on this fair value gap, which was caused after this change of character, and also is resting on this support level. Okay, because that level acted as a resistance here, and then if the market gets back to this level from the upside, it's going to act as a support level. Okay, so now what I'm expecting the market to do by next week is come here, give me a liquidity sweep with some kind of candlestick confirmation, give me a weak rejection with some kind of candlestick confirmation to the downside, like the bearish engulfing candlestick. Then all you just have to do is take the trade and then put your stop loss around this second fair value gap, which is also around this 0.618 in the Fibonacci retracement. Okay, so here is how the trade is going to be. The market gets here. I know that the market is currently in an uptrend. Okay, so it's better for you to be looking for a buy position rather than a sell position. But equal highs, which is double top, and equal lows, which is double bottom, they are very vital candlestick patterns that set for a reversal, and a lot of the time they are more likely to work than they are not. So that's why I'm trading this double top. I'm going to take a sell position from here. If the market gives me any kind of candlestick confirmation like the bearish engulfing, take a sell position from here. Then my stop loss, my take profit will just have to be here. My stop loss, let's say maybe 15 pips. Yeah, I normally use 15 to 10 pips within those range. Yeah, then my stop loss is going to be around this level. So that's it. It's very simple way of analyzing the markets. You just have to look for your support and resistance level on the daily time frame, 4-hour time frame. Come down, you look for your liquidity levels such as your fair value gap, your equal highs, your order block, your recent high, weekly low, just a lot of liquidity levels. You look for them in the 4-hour time frame, and then in the 30 minutes time frame, you just look for candlestick patterns, and then as soon as the market gets to your POI, which is your point of interest, You just need to wait for a candlestick confirmation and just take the trade. Yeah, just take the trade. I mean, you don't have to worry about the outcome. You get to make the decision, but then not the outcome of the trade. And if you're really worrying about the outcome of the trade, it's going to cost you a lot. And also, if you want to join my Telegram channel, which for the past few days now, I've not dropped any signal because this this December period there's not a lot of liquidity in the market, and the major banks and institutions are going on holiday, so that's why there's not enough liquidity in the market. You can see I have 70 subscribers here. It's a slow community, and it's growing fast. Yeah, some of the signal that I drop, um, they go in our they go in my direction. So you can see a lot of them. Okay, like majority of them go in a direction. Yeah, we still take some losses too, right? But the money coming in is a lot more bigger than the one going out. And also, I want to talk about this $15,000 account. Okay, I've taken this $15,000 account to 15,900. But then by next week, I'm going to show you the current result of the account, which is the current account balance. And I think by next week or maybe next year, I'm going to start a series on trading 15K prop firm account, funded next prop firm account. Okay, so that is the Telegram. I'll put a link in the description below. If you want to join, it's totally free. If you don't also want to join, that is all on you. Okay, so see you on my next video, and thank you very much for 177 subscribers. I truly appreciate the way my YouTube is growing really fast. Yeah, to me it's growing fast, and I really appreciate every one of you who have subscribed to my YouTube channel. Thank you very much. I hope you find this video helpful.